from Lilu's investment in Lukoil, a deep dive into a value play. Part 5. Lukoil as an asset, not a stock. Lilu isn't looking at Lukoil as a ticker. He's looking at it the way you'd look at land, or a pipeline, or a mine. Strip away the headlines, strip away the politics. What's left? Oil in the ground, wells that produce, infrastructure that already exists. A company that moves barrels from reservoir to refinery to export terminal. That's the asset. And this distinction matters, because in broken markets, stocks lie. Prices scream. Volatility distracts. Narratives dominate. But assets are quieter. They just sit there doing what they do. Lukoil controls enormous reserves in Western Siberia. These aren't speculative fields. They're known, mapped, producing oil that had been drilled, measured, and pumped for decades under the Soviet system. While the macro environment provided the opportunity, the specific selection of Lukoil demonstrated Lilu's ability to distinguish quality within a distressed asset class. Not all Russian vouchers were equal. Many represented ownership in obsolete manufacturing plants or enterprises stripped by red directors. Lukoil was different. Lukoil was formed in 1991, just prior to the Soviet collapse, from the merger of three major oil and gas production associations in Western Siberia: Langapasneftgaz, Ureneftgaz, hence the acronym LUK, along with several refineries. Unlike Gazprom, which held a statutory monopoly on gas and was viewed as a state within a state, Lukoil was one of several vertically integrated oil companies, or VIOCs, created by the government. By Decree No. 1403 in November 1992, Lukoil was transformed into an open joint stock company in April 1993. This legal restructuring was the prerequisite for its privatization. While the state retained a controlling stake initially, significant equity was distributed to workers and sold via voucher auctions. The physical reality of Lukoil's assets stood in stark contrast to its market valuation. Reserves. In the mid-1990s, Lukoil controlled proven hydrocarbon reserves that rivaled those of global supermajors like Exxon or Royal Dutch Shell. Estimates placed these reserves in the range of 10 to 15 billion barrels of oil equivalent, though audited figures would later confirm even higher amounts. Production. The company was responsible for a significant percentage of Russia's total oil output, pumping over 1 million barrels per day. Vertical integration. Unlike many fragmented post-Soviet entities that only controlled extraction or refining, Lukoil controlled the entire value chain, from extraction in Western Siberia to refining in Perm and Volgograd, and retail distribution. This allowed it to capture margins at every stage and, crucially, gave it access to export markets. Vagit Alikperov, a former Soviet deputy minister of the oil industry, was the architect of Lukoil. Unlike the oligarchs who would later acquire assets through the rigged loans for shares auctions, like Khodorkovsky or Berezovsky, Alikperov was an industrialist. His strategy was to model Lukoil after Western majors like BP or Eni. In 1994, Lukoil became the first Russian company to begin trading on the nascent secondary market and hired KPMG for auditing, signaling a seriousness about transparency that was rare in Russia at the time. By 1995, Lukoil had secured a strategic partnership with ARCO, Atlantic Richfield Company, which purchased a stake in the company, a massive vote of confidence from a Western major that validated the asset quality. For Lilu, these qualitative factors, a management team oriented toward Western capital markets, early adoption of auditing standards, and a consolidated corporate structure provided a layer of safety that pure cigarette butt stocks lacked. He was buying a high-quality business at a liquidation price. This isn't a venture bet. This is replacement cost logic. If you wanted to recreate Lukoil from scratch, find the oil, drill the wells, build the pipelines, train the workforce, you'd need tens of billions of dollars and years of execution. But the market isn't pricing that. It's pricing fear. So Lilu ignores earnings. He ignores quarterly numbers. He ignores management forecasts. None of that matters in this moment. What matters is this: the oil exists, and the world needs it. Oil is a global commodity. It doesn't care where it comes from. It's priced in dollars. It moves across borders. It clears internationally. That single fact collapses a lot of the risk people obsess over. The ruble can collapse. Politics can swing. Accounting can be messy. But if oil is coming out of the ground, it will find a buyer. And here's another layer most people miss. Costs are local, revenues are global. Lukoil pays wages, electricity, services, and rubles, but it sells oil at global prices. When the local currency weakens, the economics improve at the asset level. This isn't theory, it's mechanics. So when Lilu looks at Lukoil, he's not asking, is this a well-run public company? He's asking, what is the implied price per barrel I'm being offered? And the answer is absurd. He's being offered oil reserves for pennies on the dollar, sometimes fractions of a penny. That's not a forecasting problem. That's a measurement problem. If the reserves are real, and they are, then the price is wrong. Everything else becomes secondary. Yes, there's governance risk. Yes, there's political risk. Yes, there's theft risk. But those risks are bounded when the entry price is this low. This is the core insight. When you buy assets at a liquidation-style price, you don't need perfection. You need survival. Lukoil doesn't need to become Exxon. It doesn't need Western standards overnight. It doesn't need pristine shareholder protections. It just needs to keep pumping oil. And it does. That's why Lilu treats Lukoil as an asset first and a stock second. Because in moments of systemic stress, stocks are claims people dump. Assets are realities the world continues to use. And when the gap between those two gets wide enough, the investor who focuses on the asset, not the ticker, ends up owning something real at a price that makes time work for him. That's the Lukoil decision. Not a bet on Russia, a purchase of oil mispriced by chaos. This is Avi. Like and subscribe. On to the next.